What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex and we're going to be going over a pretty under the radar stock called Tattooed Chef, ticker symbol TTCF. As we can see, it is just under $20 per share, and we're going to be going over why we're bullish on this stock in the long term. But before we get started, take a look at the link in the description for our Discord. We have buy and sell options and stock signals from dozens of analysts, as well as weekly and daily watch lists. But let's get back into this video. We're going to be going over Tattooed Chef. As we can see in the 1 year, it's only up around 30%. And this is one of the high short interest stocks. But right now it's in this consolidation phase. As we can see, it has this nice pendant formation. We go to the technical analysis, really nice wedge shape. So we can see a nice consolidation as it gets smaller and smaller, lower highs and higher lows. So my anticipation is it's going to bounce right off this $18 mark, and then it could shoot up or down. We do not know, but what we do know is there's a very good opportunity to play options on this stock. Or if you don't want to play options, you don't have options enabled on your brokerage, you could just outright buy and hold stock, because this is a very good company. It's an alternative to Beyond Meat, which produces plant-based foods. So they do a similar thing, and it's a very good alternative. They have their own e-commerce website. You can find their products in grocery stores, or you could just buy and prepare the meals from their own e-commerce website right here. Lots of great products, and a lot of people have given them positive reviews that they taste better, possibly better than Beyond Meat. So this is an up-and-coming company right here. Very good for the long term. And I'm definitely going to be adding some call options, some long-term call options to my portfolio. Because when stocks consolidate like this means that there's not very much movement in the short term. As we can see, the volume is decreasing slowly, which is very good. And it's a very good opportunity to purchase some call options, because the premiums are going to be lower when the volume and implied volatility are lower as well. And this is also a high short interest stock. As we can see here, it has a high short interest standing at nearly 25% of the float. So they suggest that this stock has significant potential to become a short squeeze candidate among retail investors, which if we take a look at the technical analysis, it definitely could, and it could break out to the upside pretty soon. But we're not going to time it. We're going to buy some long-term call options, and when we get into the options chain, we will see that the premiums are going to be significantly lower. But as far as the revenue, they are actually reporting earnings in 2 weeks, and I think it's like August 12th. So this is a very good opportunity to buy call options early for the stock, because the premiums are going to be a lot lower, and you can catch that run up because when earnings gets nearer, that means that implied volatility is going to increase. The premiums are going to increase as well. So if the stock stays flat, we're probably going to make a little bit of money, because implied volatility is going to rise due to earnings. Earnings has a very high implied volatility period, and it does run up the contracts a lot. So it's very good to get into the stock early to catch that run up. You are going to lose some value of premium every single day due to theta decay, but I do think that it will be redeemed by the increased implied volatility. So we're going to get into the options chain, and as we can see, if you do an August 20th expiration date, a $20 call option only costs you $103. Implied volatility isn't very high compared to what it normally is, and the theta is not that bad either, only $3 a day. But $103, very, very cheap contract, and it has an expiration of August 20th. Remember, this stock is going to report earnings on August 12th. So you're going to be well in before or after the earnings. And if you don't want to hold through the earnings because it's pretty risky, you can always sell the day before in order to capitalize on the higher premiums, the higher implied volatility, and just overall it's going to be a little bit safer. But yeah, if you even want to do something a little bit riskier, you could do 22.5 strike. But I highly recommend this $20 strike, or even go a little bit further in the money, maybe a 17.5 strike. But overall, if you want to play a shorter term expiration, August 20th would be what you want to do. This is perfect for people with smaller accounts willing to take on a higher risk, higher reward position and try to grow your money exponentially. But something for me, of course, the earnings is going to be great, but I'm more looking for the long term. And the best way to do this is to do leaps. Now, a leap is a call option that has an expiration date that is a lot more further out than just an August 20th. So, for example, we could do like an April 14th or even a January 21, 2022. That would give us around 5 months of expiration. So that would be the minimum I would probably play. And as we can take a look at the option premiums, it's not that much more. A $20 call option is only going to cost you $305. So where we saw the August 20th expiration, it cost $103. And that gives you about 3 weeks of expiration, almost a month, not quite, but as we see here, 5 more months of expiration, and it's only going to cost you $200 more. So in my opinion, this is a lot more worth it than the August 20th. Premiums are very low, and you're going to be catching the run up for earnings. And overall, you just have a lot more time on your hands for the contracts to play out. Because as we can see here, we're in this phase, this consolidation phase. So there's not much movement in the short term, but it could have a really big movement in the long term. And that's what we're going to try to capitalize on with our call options. Of course, buying and holding stock is a viable strategy as well. It is a time-proven method, but if you want to grow your money exponentially, call options is going to be high risk, high reward, and perfect for people who have small accounts and looking for some more risk in their portfolios. If you want, you could do an even further expiration date, April 14th. Not even $100 more, and you get 3 more months of expiration. So this is a very good time to take advantage of the lower premiums on this stock. It's a very good alternative to Beyond Meat, which, as we can see, the stock is actually at really high levels. Beyond Meat's over $100 per share, but this stock is only at just under $20 per share and has a lot more potential if you're looking to get into plant-based food companies. So as you can see, it only costs $80 more for 3 more months of expiration. Very, very cheap, and it's going to give you a lot of time for these contracts to play out. Because remember, call options, they hold 100 shares. You're leveraging 100 shares for a fraction of the price. So it's a very, very good to play if you're bullish on a stock. And if you want, you could do December expiration. As you can see, it's going to cost you $585, and you're gonna have a lot of time with the December expiration time. You're gonna get around, let's see, 16 months of expiration just for $600. That's a really long time out, and you have a lot of time on your hands for this to play out. But in my opinion, a January or April 14th expiration is fine enough. But if you're really wanting to do long term, December is a good option as well. Very, very long expiration, cheap premiums, and overall, it's not really going to decay that much. As we can see, data decay is only going to be $5 per day off your contract, which isn't even that bad. Not even $5. It's going to be half of a dollar. So as we can see, very good potential with this company, consolidation phase, and in my opinion, this is a really good pickup if you're looking for another stock to add to your portfolio. A lot of people don't have these sort of companies like Beyond Meat or Tattooed Chef, and there is a lot of potential with it since a lot of people are looking towards plant-based foods. But that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on Tattooed Chef, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.